Zimbabwe presents a potentially rewarding investment climate. And today we want to be looking at that climate with regards to financial markets as well as the capital market itself. My name is John Masugu and welcome to Economic Forum, where we discuss various issues affecting our economy in Zimbabwe, ranging from agriculture, manufacturing, industry, human capital, and many other facets that we bring experts here, discuss in order to see how they impact our economy. And as I've said, today we are going to be talking about financial markets and the capital market itself. And today we are honored to be hosting the Chief Executive Officer of the Securities and Exchange Commission of Zimbabwe. Welcome to Economic Forum.
Thank you, Mr. Masuku.
Yes.
It's a pleasure to be here.
Yes. It's always good to know what exactly you do. And also, as we discuss, viewers are going to fully understand what we mean by securities, by markets, the difference between markets, financial markets, and the market, the capital market. But your role and mandate in all this?
Our role is regulation. So we are a regulator for the capital market. I think to give context, most people are familiar with the regulatory board for banks, which is the Reserve Bank of Zimbabwe. We play a similar role, but looking in the capital market, or at players in the capital market. And our core mandate, in as far as that space is concerned, is looking out for investors, what we call investor protection, so that they don't suffer from financial crime, fraud, or misrepresentation by our financial players. So we register securities exchanges, we license intermediaries, but in summary, our role is regulation. We are a regulator for the capital market.
Let's have an overview of that capital market. What are we talking about?
The capital market is a subset of the broader financial sector. At a national scale, we talk of the financial sector, which is then broken down into the banking sector and the capital market. So the two complement each other. If you look at the banking sector, this is where you find what we call short-term products. And then if you look at the capital market, this is where you look and get your long-term financial products.
So which ones are the short-term products?
Short-term products are your normal deposits, your fixed-term deposits, your bankers' acceptances. Those are the products that you find in the banking sector, which are short-term. And short-term, when you talk in financial terms, that's a tenure of 1 year or less. When we come to the capital market, we are dealing with products that have got a tenure of at least 1 year going forward. In terms of the overview, it's quite a broad array of service providers that you get in there. At the moment, we've got about 225 institutions that provide services in that space. The most common that would be known probably by most Zimbabweans is your securities exchanges, the Zimbabwe Stock Exchange, the Victoria Falls Stock Exchange, just to give examples. Then you also find stockbrokers in the whom are your intermediaries when it comes to trading on the stock exchange. We're also in charge of asset managers, which we've got a number of them, about 32, which are licensed. We're also in charge of financial advisors, custodians, trustees, and your collective investment schemes.
Do financial advisors also include insurances?
That's another subset of the financial ecosystem, but they've got a different regulator, which is IPEC. So insurance, these are different. Insurance, pensions, these are actually our clients because they're the ones that invest a large part of their finances into the capital markets.
The capital market is very important when it comes to the overall economic development of the country. Now, looking at all those, how are we doing?
Very, very, very good. So when it comes to the role of the securities market, the capital market, its major role is to provide intermediation. Intermediation simply means facilitating. So we are there to facilitate the channeling of savings from those that have got excess funds to areas where there's need for those funds. That's the intermediation. So we provide platforms that enable investors or savers to be able to place their excess funds into investments so that they earn a return. But whereas the investor is getting a return, we are playing a role for those entities, for those institutions that are looking for capital to then have access to long-term capital. So governments, entities like your manufacturers, agriculture, and so forth, have got investment requirements or funding requirements, and they've got access to banks where they can get loans. But when it comes to long-term capital, they have to utilize the securities market, because this is where you get long-term funding. So the major role which we play is to intermediate or to facilitate mobilization of savings from those that have got the savings into areas where the capital can be deployed for productivity.
That's Enimo Taruvinga, who is the Chief Executive Officer of the Securities and Exchange Commission of Zimbabwe. Today we are discussing financial markets as well as the capital market itself, how those facilitate the economic development of Zimbabwe. Join us in the second segment of Economic Forum. We are now in the second segment of Economic Forum, where in the first segment we've discussed the overview of the capital market as well as the role that is played by the Securities and Exchange Commission of Zimbabwe. And in this segment we want to kick off by looking at recent market developments with regards regulation and investor education itself. And our guest here, of course, is none other than the Chief Executive Officer of SECZIM, Mr. Enimo Taruvinga. Now, let's look at the recent developments.
Thank you, Mr. Masuku. So I think the most significant one is obviously the change in currency which took place in April, when we introduced our own Zimbabwean gold, which is a currency backed by gold and other reserves. That's a significant milestone in our sector, in that it brought stability. And for investments to work properly, you need macroeconomic stability. So by having our own currency which is stable, it makes investors be able to plan and to invest accordingly. The second aspect is that it also brought into reign inflation. I think prior to that, we were recording inflation as high as 55%. Now inflation is below 5%. Which is also good for investments, because when you part away with your investments, inflation is, I would say, the worm that can eat into your capital and even into your returns. So when inflation is above, below 5%, that's an optimal level. It makes investments to be sound. The other significant...
While there,
yeah.
In the past, with this stability soon after introduction of a new currency, is there that confidence that ZiG will last forever with this stability?
I would want to believe, I think, the assurance that we have received from our monetary authorities in as far as the currency is concerned. I think even if you look at our head of state, His Excellency the President, and the way he's supporting, I think, the success of this currency. For me, it gives me confidence that I think we are all together in the interest of ensuring that we've got a viable currency that takes us forward. So I'm quite confident that the stability will continue, at least in the short to medium term. I was about to say the other major significant event in our market is recent policy measures that were introduced on the 28th of June. We had a statutory instrument that was brought in the market that reversed certain taxes that were making our market very expensive. So we saw capital gains withholding tax coming off from about 4% to 2%. We also a suspension of capital gains tax. It had been put at 40% previously. Now it has been suspended. There was also a vesting period of 180 days for a market, which has been removed. For us, that's a significant milestone in as far as trying to bring confidence into securities markets, because it deals with the cost of investing. It also deals with how your returns are taxed when you invest. So the reduction in the capital gains taxes is a welcome development, which we hope that it will, create appetite for investors to put more money into the securities market. We also coming on the background of new products that have been introduced on the market. I think recently we introduced contracts for differences. They're basically derivatives that allow you exposure to certain asset classes like commodities, equities in foreign markets, currencies in foreign markets. And these are good as far as trying to tap into untapped markets, especially our young generation. They want sophisticated products that are fintech driven, and we managed to bring that product to the market through our VFX platform.
When we talk about investors, many people usually think about foreign investors, but from what you are doing, you are also encouraging local, individual, as well as corporate investors, and you are actually carrying out an education program for investors so that they are in the know.
Yes.
What is it that you are doing?
So investor education is actually part of our core mandate. I spoke in terms of core mandate being investor protection. It's complemented by investor education because an educated investor is an empowered investor. Before they can be ripped off, at least they are aware of the products, they are aware of the risks. So that's the first point for us. We want to make sure participants and those that are eager to participate in our market are knowledgeable about the products, are knowledgeable about the intermediaries, and are also knowledgeable about the regulations, that revolve around the securities market products. So we have been doing a number of activities in promoting investor education, webinars, conferences, even attending exhibitions. We have also been moving into universities and schools. We have got a program that we're working with the Ministry of Primary and Secondary Education, where they gave us liberty to move into all the 10 provinces and speak at schools and deliver investor education at primary and secondary level. We have developed a booklet which we worked through with the Ministry of Primary and Secondary Education, and they've deemed it to be proper material that can be infused and be delivered even for primary school level students. The desire really is to increase the level of awareness and literacy when it comes to securities markets. A survey that was done in 2022 indicated that the level of awareness in our country is 2%. And our desire as the capital markets regulator is to bring that percentage up so that we've got more Zimbabweans knowing about the securities markets.
Are you also looking at other languages? Because so far you said you have translations into Shona and Ndebele, and obviously we have English. How about the other languages that are also covered in our constitution? Are you going there?
That's definitely the target, and that's the purpose why we launched that campaign, so that we can get resources. I think, as you might be aware, resources are always a constraint. If we had, unlimited resources, we would have done all the, languages that are prescribed in this country from the word go. But we have taken it gradual. As resources are availed, we definitely are going to issue translations into other languages that are recognized in Zimbabwe.
That's Enimo Taruvinga. He's the Chief Executive Officer of the Securities and Exchange Commission of Zimbabwe. Today we are discussing the securities market, the capital markets and financial markets, and I hope from his explanation you now as viewers understand what all these terms mean. So join us in the third and final segment of Economic Forum. In the second segment of Economic Forum, we dwelt at length about investor education, the importance of educating the investors, as well as emphasizing the importance of regulation. My guest who is discussing all this is the Chief Executive Officer of the Securities and Exchange Commission of Zimbabwe, that is Mr. Enimo Taruvinga. There are these unregistered players who have come up with pyramid schemes and so forth. How does that come about when we have a commission such as yours?
Thank you, Mr. Masuku. It's a difficult one. As I said, part of our mandate is investor protection. Unfortunately, criminals have got ways, of coming up with schemes that try to evade regulation from time to time. The unfortunate bit, as you mentioned, is that we've got a large population that appears to be unaware of what is safe and probably what is not safe. That's why we are driving more and more about investor education, is to try and make sure that our citizens at least are informed of what is proper intermediaries in the market. As I mentioned, the capital markets is only a subset of the financial ecosystem. We've also got the money market side. We also have got the insurance and pension side. And each of the three pillars have got different regulators. We all have got an equal mandate to try and protect investors from these shenanigans. It's quite unfortunate that people lose money. But I would also want to say, when something is too good, I think it should trigger your sixth sense to say, can I hold on, reflect a bit before I put in my money. There's no free lunch, as the adage says. And, these schemes normally come with, very high returns over a very short period of time. And this seems to be the honey that traps, most people without looking or considering the risks that might be involved. And the unfortunate bit is some actually are able to get that return as a way of luring more and more of people to come into those schemes. But in our own space, what we are doing, we actually publish the registered players in our sector. I think the RBZ is the same thing. IPEC also does that. If you visit the websites of all these regulators, the legitimate intermediaries' names will be found on those websites. And this is where we are saying our investors should be astute enough to work with the regulator so that we avoid these shenanigans. The second aspect in as far as dealing with the registered players is concerned, you find that especially for banks, there's the Deposit Protection Corporation, where if you lose money after dealing in a legitimate bank, there's recourse to compensation. Similar to us in the securities industry, we've got an investor protection fund, where if you deal with our legitimate licensed player and you suffer a loss that can be determined that it was due to malpractice by our intermediary, you are also eligible to be compensated for that loss.
Are people aware of that?
Unfortunately, not many. Some are, but we still have got a lot of ground to cover. I think this is why we keep harping and saying we need resources to further and further do investor education. But to answer you why this keeps happening, the platforms that they normally use are outside of our scope. So you find that they are not using intermediaries like stockbrokers or securities exchanges. In the immediate one that I think happened a few months ago, they were using mobile platforms, which are not under our purview. So I'm not sure whether the regulator in that scope was aware of that, but that's really, they use sophisticated platforms or platforms that are outside the norm to get away with it. But once they are exposed, especially if they're dealing in our sector, we do take action.
When everything is said and done, what are the current investment opportunities we have for individuals as well as for corporates?
Thank you for that. So we have got a number of products in the securities market that are clearly of interest to individual investors. So these are products that have reduced initial capital outlay. You don't require much to actually participate. Examples would be unit trusts. Unit trusts actually break down investments into units so that the retail investor can participate. And the unit trust is just a subset of what we call collective investment schemes. Under collective investment schemes, we also have got REITs. REITs are real estate investment trusts, which allow individual investors to actually have exposure to real estate, your properties. So you can actually have exposure to shopping malls that are part of what are listed on the markets. We also have got exchange traded funds that gives you exposure to securities that are listed on different exchanges. We also have got online platforms where you don't actually need to visit any broker. In the comfort of your home, you can actually download an app on your mobile phone or on your laptop, and you can actually participate in the market. We also have got platforms for SMEs through one of our licensed players, which I think if interested SMEs are there, they can approach the regulator and we can direct them to the right platform. But we do have products that are earmarked for individuals.
I'm sure you have an open door policy, and if you do, what is it that people can expect from you if they knock at your door?
First and foremost is the knowledge. Like we said, our principal area is to protect investors. So any investor that has got an interest in the securities market can approach the regulator to be educated about the products, the intermediaries, the risks, and if there are any rewards for investing that are potentially there. The second aspect is that besides just the regulation and investor protection, we also license the players that provide the services in our industry.
Anymore, let's now talk about the threats and opportunities that may be brought in by cryptocurrencies as well as artificial intelligence.
Yes, so you have rightly put it that it presents both opportunities and threats. As far as capital markets are concerned, we are actually working in terms of reviewing a regulatory framework to incorporate these fintech developments. In fact, last year we launched an innovation office to try and work with pioneers in that area to bring them to some form of oversight by the regulator. So we're providing a sandbox where those that have got nascent ideas can come and experiment under our purview as part and parcel of informing us in terms of what we need to incorporate or change in our regulations. Currently, we don't have regulations that regulate that area, and it's a threat in that space. In that, if our investors are participating, we don't have oversight, but we don't want that scenario to continue for long. So we are currently reviewing a regulatory framework so that we incorporate those developments. The idea is to work with virtual asset service providers so that we bring them under some form of regulation. It's not new. I think in other jurisdictions, Mauritius, for example, they now have got an act that speaks to virtual assets. South Africa recently as well. They recently passed a law in terms of how that space can be regulated. And this is what we actually want to do as Zimbabwe, but we are in the process of working on that regulatory framework so that we can see how we regulate this industry and probably benefit from the upside of it and probably minimize the threats that can be posed if it continues unregulated.
Well, Anymore, would like to thank you very much for the financial literacy that you have imparted to the viewers in this program, where we're talking about financial issues, securities, the capital market with Anymore Taruvinga, who is the Chief Executive Officer of the Securities and Exchange Commission of Zimbabwe. We hope that you have enjoyed, and if you'd like to engage with us, you can do so on the numbers that are showing on your screen. If you also would like to engage with us on our social media platforms, you can do so on the platforms that are showing on your screen so that we can get back to the likes of Mr. Taruvinga here in order to answer your question. If you have missed some of our episodes of Economic Forum, you can actually watch them on our YouTube channel, which is Economic Forum Zimbabwe. So on behalf of Anymore Taruvinga and the production crew, this is John Masubu wishing you happy viewing.